look at the market, we're seeing a hint of red on the Nifty right now. We've slipped below the 25,050 mark nominally, but very flat. Sensex flat as well. Nifty Bank still holding on to some momentum. A 0.4% uptick coming over there. Bajaj Auto, Eicher, Hero Motor. So clearly the day of autos coming in. Top 3 Nifty gainers. On the flip side, Infosys, Eternal, TCS, Grasim, HCL Tech. So IT is the big loser in today's trade, including Tech Mahindra as well. But let's talk about the recent news flow that we've got from overseas, and Moody's has downgraded US credit rating from AAA to AA1. On the back of that, just taking stock of what the US futures are doing right now, Dow's lower by 0.8%, and it's more than a percent cut coming in on S&P 500, and Nasdaq now inched to open more than 250 points lower on the Nasdaq. So that's the state of the US futures right now. This coming back, of course, on the back of that downgrade coming in from Moody's from AAA to AA1, citing ballooning debt and rising interest costs. The last major agency to hold the US at its highest rating, which was Moody's, has now joined S&P and Fitch in signaling concern over America's fiscal outlook. Gaurav is joining us with more details on this and what this downgrade could mean for the US economy. Gaurav, take it away.
Well, yes, Moody has now went ahead and downgraded the sovereign rating for USA from AAA to AA plus. Now first AA1. Now let's understand. Now Moody actually AAA was actually the most pristine rating that they had given to any country. And when we look at the history, it was assigned in 1919 for USA, and after that, this is the first time when Moody's has actually cut the rating to AA1. Now let's understand what has actually happened. They are actually concerned about the rising debt because as per Moody's, the debt is now clocking around $36 trillion for USA, and this can actually put some pressure going ahead. Other than that, what they have also said is that this can actually also complicate and put some pressure on President Trump's all the attention and intentions about the rate cuts, and at the same time the intention of sending a ripple effect on the global markets. When we talk about Moody's history, let's also not forget that it is actually the third rating agency and the last rating agency who is actually cutting the US sovereign rating, because already Fitch and S&P had cut the rating. When we talk about Fitch, they had cut and downgraded the rating to AA plus in August 2023, and S&P also cut this rating in 2011. Now what Moody's is also saying is that when we talk about the overall impact going ahead, it actually reflects the increase over more than a decade of government's debt and interest payment ratios that actually increased. And at the same time, what experts are also believing is that with this, we will see two impacts. First is that the interest rate bond yields will actually go up, and second is that the impact of rate cuts can actually something to be watched out for, because as experts suggested, this can actually be in focus because now a little of upper hand that US has will actually go down, and that is the reason why this was an important move. When we talk about US futures, we've already seen some kind of negative impact, but definitely watching out on how this impact can actually affect the overall the tariff rate cuts and the other decisions made by USA.